Hey guys, Whitney here. I know you guys are filing into the room right now, so we're just going to give you a couple minutes to get everybody in. Before we kick off today's conversation, I just want to make sure you guys have found the chat box and the Q&A box. If you have a question during today's presentation, make sure that you're dropping your questions in the Q&A box. Is easier for me to track, but chat is totally fine. And we will take care of those questions, in the order that they come in, or like if they make sense in the presentation. Otherwise, I will clean all those up at the end. All right, guys, let's see. And disclaimer, because Kelly and I were talking before the show, I just had a procedure done on my elbow, an injection procedure. Long story short, if I move my right arm and you see me grimace, I'm totally fine. It's just, I'm going to try to move as little as possible. All right, guys, let's see. I think we have most people filed in here, so let's kick it off. All right, guys, welcome to another episode of the Passive Investing Made Simple show. I am the director of investor education here. My name is Whitney Elkins-Hutten. Thank you so much for joining me today. If we do this webinar series to help you learn the ins and outs of passive investing, put this knowledge into action so you can confidently go into your first or next investment, and possibly with us here at passiveinvesting.com. But what we'll go over here today and in all the episodes of our series is universal, right? I just really am very passionate about educating you guys on passive investing so you can realize this very powerful investment strategy for your life. So if you're not already on our list, okay, so if you're not watching this live, make sure you go over to passiveinvestingwithwhitney.com. And even if you are watching this live and you want to hop on the phone call with me, go over there, fill out a quick little form. I've got some educational goodies for you, a checklist and an ebook, and we can hop on a call and talk about your investing goals and how I can help you. But I just want to kick off today's call with a very special guest, Kelli Garrett. She is the managing partner of the debt fund here at passiveinvesting.com, also known as Rehab Wallet. And Kelli, let's just dive in. Tell us a little bit about yourself and how you got started into real estate.
Well, I'm originally from Easley, South Carolina, and I came to Charleston to play basketball at the College of Charleston. So I was a student athlete a few years ago. And so, how I started in real estate, really, I guess I just followed up behind like a lot of us do with our parents. My dad, he'd buy a little duplex. He had a mobile home park, and I just kind of followed up behind him. He was a true entrepreneur, and it kind of like was able for me as a child to see him and follow behind him a little bit. So while that wasn't his only job, I found out that it was creating some cash flow for him and my family to be able to do some extra things, whether it was to send us kids off to another camp or two for the summer, because we all played sports, to whatever else we did with vacations and so forth. So I just saw it kind of as some cash flow at an early age, I think. After that, after college, I ended up going to start working in corporate America at UPS for 12 years. And I moved 11 times in 12 years for UPS. And I think I kind of just got delved into real estate through that. You buy a house, and if you are with corporate America, you then sell a house and move and get transferred somewhere else. But and I found myself, making money along the way as I was buying and selling homes as a W-2 employee. And so after I left UPS, I was just intrigued with compound interest. It goes way back to me as a child, but I got kind of intrigued with that and opened up, it's a long story, but I opened up a mortgage company, a traditional mortgage company from 2000 to 2009. We had 3 locations in South Carolina. And so that gave me the experience to really, really start investing in real estate, because I knew how to fund it. So a lot of questions always come is, how do you fund all these deals as a real estate investor? But once you get that education of how to fund it and know that education, then you can actually buy real estate and fund it in multiple different ways. So that kind of was my, I guess, forte into real estate. I love real estate, always have. We're in 22 years of it, so a few decades of buying and selling real estate along the way. We flipped a bunch, hundreds and hundreds of properties. We've, bought and sold a few businesses along the way that had real estate. So real estate's actually been my love for a long time.
Awesome. I have to pick your brain after the show because, I'm the first generation, first generation of my family that's involved in real estate. And my daughter is going to be having your experience, growing up. So we need to connect after the show.
Absolutely. They all are learning from all of us, we don't realize what they're taking in. I don't know that I knew what I was taking in from him. Obviously we were doing it on a little bit smaller scale than what I do it at. And, but I've learned a lot at a young age, just subconsciously. You don't realize what they're taking in.
Oh, absolutely.
Yeah.
I mean, right now our daughter's always just saying, can we just stop talking about investing at the dinner table? We've made dinner time a little off limits on investing.
I know, that's what my poor family gets it too. They just are done with talk about investing in real estate, but that's okay. Just keep talking to them.
Right. So, talk to me about the transition. We talked a little bit, you mentioned that you opened up the mortgage company. How did you transition into working or partnering with passiveinvesting.com? Like, how is that relationship organized?
Well, how I really met passiveinvesting.com and the partners at Passive Investing is really just networking. Let's just call it that. In Charleston, one of the partners there, his name is Danny Randazzo. Obviously, a lot of you know. He lives in Charleston, and he was, facilitating a morning networking breakfast, if you will. And he was just starting it. And I'm always looking to be more involved in any type of networking I can as a active investor. I'm not as a Rehab Wallet managing partner, but as an active investing, investor. That's what I was doing. And so, there's lunches I go to, there's, breakfasts that we go to, and we're constantly surrounding ourselves with just other people that are doing the same thing, like-minded people. And so that's how I met Danny. And, we just kind of gravitated toward each other. I knew he was super smart. He was just starting, he was flipping himself residential. So he wasn't into multifamily. I guess that was 3 years ago. Gosh, they've come a long way, and how much business how many units they have bought so far. But I started learning a little bit about him. And I was in hot pursuit of people that were doing things bigger and better than I was, so that I can continually learn. Sometimes, I told you I'm 2 decades in, so I was doing a lot, and I wanted to continue to surround myself with people that were doing stuff and were ready to do some stuff bigger and better than even I was. And so that started my relationship with Danny. And then I invested personally. My first deal was in Greenville. I'm originally from Easley, South Carolina. Greenville was 15 minutes away. And so that felt super comfortable with me, knew the asset, knew exactly where it was on Wayhampton Boulevard, felt super comfortable going into the asset with them, as well as I spent a lot of time courting, if you will, Danny and Caitlin and his wife, and spent a lot of time with them to make sure that the operators were who they say they are, And so we went in there, I think that was for $100,000. And since then, gosh, that was November 2018. And we're in about 1,500 units right now with them, and continue. We'll always do that, because it's we've changed our time, and our timing has changed from being active, and now 2 decades later we're more in that passive approach. And fortunately, found Danny and his team at passiveinvesting.com. So it was just because he lives in Charleston, we're all networking in the same networking groups, and that's how we found each other.
Awesome. And I do want to circle back. I want to pick your brain on that transition piece. But I know the majority of the people are, the listeners here want to learn about Rehab Wallet. So how did Rehab Wallet come about?
Well, as this kind of just takes me back to our relationship. So Danny and I, we, while we don't, people ask like, what do you have in common? I mean, he's super smart. I was a college athlete, not super smart. But we just gravitate toward each other. And so we walk every week. We try to walk every week for an hour. He brings George and Cecilia. Now they have a young child. So Cecilia's wrapped up and we just go for a walk. And we call it our dream walk. And we walk and we talk to this day. But 18 months ago, we were doing our dream walk, and I had already been in lending personally. So my partner and I, we have been or lending to these people that in Charleston that might need a loan here and there. So we were doing our own private lending. So, and what I had found was that I was getting more calls than I had money in my sandbox here to lend out to them. So I said in our dream walk, I said, Danny, hey, I'm getting more calls than I personally have money. Do you think Dan and yourself and Brandon can raise some money in another fund and I can lend it out? He knew I had the experience of already opening a traditional mortgage brokerage shop from 2000 to 2009. I already had that experience. Already had 2 decades in this area of networking. I'm engulfed in a network here in Columbia and in Charleston. And so I knew I could get the phone to ring. And so with business. And so that just formed this. We started out super slow to see if they probably were wondering if, I could keep up with them. And then, my cocky little self was wondering if they could keep up with me. So we were wondering if we could keep up with each other. And obviously I think we've found a good, happy balance. They're raising money like crazy and I'm lending it out like crazy. So it's been a great team and a great relationship so far.
Awesome. And I love, it reminds me of the quote, from Jim Rohn. And, if you're a real estate investor, a quote I'm about to say, like, you are the average of the 5 people that you surround yourself with. So,
Yes.
So very true here. Awesome. All right. So this is a perfect segue into what is the core investment thesis of Rehab Wallet? Like what are you lending on?
Our average loan amount is, we had our monthly meeting this morning with the partners. Our average loan amount is $180,000. Okay. And so that's where we feel super comfortable. Yes, we'll take some flyers every once in a while on a multifamily, but as long as it's first mortgage and our loan to value is where it is in line to our other, but mostly 95% is collateralized over single families. And the average loan amount is $180,000. So, we want experienced borrowers. We want, at least 2 that they've done 2 deals in the last 12 months. We want a specific borrower and a specific asset class or asset period. So I want to see, I look at most all deals. We recently just hired a director of sales that has 20 years of mortgage experience. So knows what she's looking for. I flipped personally for 18 years, almost 19 years. So we're looking at deals that I would want, honestly. I look at deals and say, you know what, if something were to happen with that borrower, would I want that deal in my portfolio during the time that I was flipping? And so that's kind of the criteria we look at. We do not pull credit. I've just learned that is not it's kind of like an SAT to me. It's just my perception and how I feel about that is that it's irrelevant. I want to know, do you have experience? Do you have contractors in place? Do I like the deal? And is your loan to value 75% or less? And right. only our VIPs get 75%. Everybody else gets 70% and less of an LTV, loan to value.
Okay. So I'm going to sound this back to you. So we're looking primarily for single family properties, maybe the occasional multifamily if it pencils out well. We're looking for 70% loan to value or less. VIPs might get 75%, but that's because they've proven out performance. And I guess let's kind of understand, is there a particular market that you're looking for here? Like if I live in Boulder, Colorado. If I brought you a deal, what would you say?
Probably not. I'm not going to probably go there. And this is why, I understand as a flipper, and that's just kind of the way we've started Rehab Wallet through the lens of a flipper. And half of my team has flipped at least one deal or more as just an employee. So they've actually done it. So we actually are working this business through the lens of a flipper. I don't know Colorado. I don't know how to deal with negative 10 degrees weather. I don't know about how that does with the pipes and busting of the pipes and what kind of roof, pitches do we need, so forth. I don't understand that. I understand the Southeast. And that's where we are right now. I don't feel like we need to go outside the Southeast right now. And if I do, I'll be bringing on a teammate that knows a lot more about maybe the Midwest or something before I gravitate in there. I understand humidity. I understand flood zones. I understand termites because that comes with water, and we're water-based here in Charleston. I understand a lot of those things. I understand red clay in the upstate of South Carolina. I understand basements and that kind of thing that up there. So I understand all that, and we're just sticking with what we know right now.
I think that's so powerful. Right. I know for me, I did over 30 rehab projects in the Kansas City area. And, every once in a while, somebody would pitch me a deal through Bigger Pockets and say, hey, come do a deal in, Idaho. And I'm like, I know nothing.
No, it's,
I know my narrow lane.
I feel like that's where, we could get in trouble and there's no sense in it when there's plenty of business in Kansas City. Or wherever you're at. Or Colorado. There's plenty of business where we're at. We're obviously ventured out of South Carolina. If there's a push pin along a map, it literally is South Carolina, Georgia, North Carolina, and Florida. There's a few little pins out in maybe Alabama or so forth. And that's only because we have a good anchor borrower, there's anchor tenants, if you will, in commercial real estate. So if you have a Planet Fitness, that's your anchor tenant, and all the little things out around it comes because Planet Fitness is there, or a grocery store is your anchor tenant. Well, the way we've made a decision is that I want to anchor borrower in that particular area before I'll go there. I don't want somebody that's just going to do a one-off deal in Fort Myers, Florida. I got somebody that'll do, 5 loans a month or so forth. So that's the kind of borrower that I'm looking for that has a team. If something happens to that borrower, his team is there to pick up the pieces and keep rolling with it. So that's kind of the criteria that we look for when we're picking a region, and we're going to stay in the Southeast.
Awesome. So that really gives a little bit more color to the markets. Let's dive in on the borrower, right? What I picked up in your last comment is that, we're not, investing in what I call single points of failure, right? The one borrower that has no team surrounding them and, is only doing a couple deals. We're looking for, high volume borrowers. What else can you tell us about the borrower profile?
I'm going to say experience, and that has a lot of, clouds around it. Again, I think I've shared with you about at least 2 deals in 12 months. Not everybody, our return borrower percentage this morning was 78%. So if you've done a deal with me, you're coming back to me, and you're coming back to me. And that's really what we want. We want the same borrowers. We understand them, they understand us. And it's working that way. We worked hard to get it. My first goal was 60%, and we blew through that the last quarter. And I'm super pumped about that 78% of our borrowers are coming back to us. And that tells a lot about our team, but it also helps me in my quest for zero defaults is that we're after that particular borrower. We don't have to, nor will we go after that. We don't have to. Just the maybe or the flyer in a borrower. I might go outside of our region with a particular borrower, but that would be only for an anchor borrower or somebody with Graves amount of experience.
And we just got some kudos for that statistic in the chat. So, wanted to pass that along. So I have a question. I know, I've invested personally in debt funds. I'm curious to understand, and we've all been saying that the real estate has to have been the top of the market since 2016, right? Obviously we're not there. And since you did invest in mortgage debt, like through that 2008, 2009 time period, how are we mitigating the risk here?
That's a great question. And yes, I was involved during that time, and I was in the mortgage business at that time. So, and I'm glad I was. While, we all learned from our failures, there was a lot of failures going on back then in the mortgage world and in my world, in my life. So we've learned a lot during that time. I've always just said during this quest to see, when this top is the top, is that our eyes are wide open to the market. I am constantly studying and checking in on market updates. That's why I don't want to go too far out of this region right now, because there's just so many markets that you can keep, your pulse on as to what's going on in certain regions. So how we're mitigating is staying firm on 70% loan to values with max 75 for VIPs. And we might have 10% of our borrowers as VIPs, but they have to earn that. They have to be doing a lot of business with us. It's a big deal when we move somebody over into the VIP. We make it a big deal for them, and they might have done 10 deals with us or 15 deals with us, and it's time for them to move over. We'll give them that 75% ARV, but I've never and won't go over that ARV of 75% after repair value. So again, how to mitigate that is if it were to change, if I were to see the market just slow down some or just breathe, and I'm expecting it, we will change those LTV or loan to values and after repair values. I'll bring those down to adjust as these appraisals adjust. So I'm very, sadly, really experienced in that arena of seeing it coming. Again, I was in the mortgage business back then, and I had a brokerage shop, and we would do 50 loans a month, and we went to 2 loans a month because there were no lenders to do business with, and people were restricted and constricted and not making any decisions back then. Home prices were, cut 30%. I know a lot of people think that Charleston is in this insulated bubble, or there's certain parts. While I don't think it will take the dives that some parts of the country will, I still think it'll reset. And we're looking for it to reset, to be honest with you.
Awesome. So let's talk about the debt fund. And let's just start off with some, can you describe what it is and why it might be a good fit for an investor's portfolio?
Well, the debt fund is, if we didn't have the money in the fund, we couldn't lend it out, right? So the debt fund is where it all starts. Personally, all the partners are invested in the debt fund, and will continue to. So the debt fund is a 506c fund that allows somebody to take money that might be just sitting in your checking account and put it in the fund. We pay 6% APR on that money. You can get it out within a 90 days. It's 90-day liquidity. So if you need it out, you can, ask for it to come back out at a certain time, and we do everything we can to get it out at the time that you actually request it to, within that 90-day period. Most of the times we get it right back out for you. So it's like a high paying CD. That's kind of the way I've actually thought about it in my mind and told a lot of people and tried to explain it that way. So it's just a high paying CD where you can actually have somewhere to put your money. And maybe you don't want to have it tied up in an apartment syndication for 5 to 7 years, because maybe you got a child going to college in a year from now. It's a good place to settle money, making 6%, to be able to put your hands on it within a 90-day time period.
Awesome. So, and how many, and this is just, because I want to kind of the investors to really understand why a fund, right? Because we could go out and you can purchase and own an individual note. But why the fund? Like how is that advantageous for an investor?
For an investor, I think a fund is, especially what the fund does. So you actually are, when you sign the PPM, or the private placement memorandum, we're actually telling you what we're doing within the fund. So we're going to take your money and cross collateralize it amongst all these deals that we're doing on a monthly basis. So if we're closing 55 to 60 loans per month, it's collateralized amongst this entire basis of the houses that we actually close on a given month. So I think knowing who owns the fund, the partners, the deals that actually go on inside the fund, and the owners, the owners of, or the managing partners, if you will, you're understanding them, you're understanding the operators, you're understanding actually what's going on inside that fund, instead of actually just placing it with someone else, whether it's a mutual fund or whether it's whatever else you might want to do with your money. Sometimes you have no idea where it's going and how it's actually being placed.
Mm-hmm. Oh, cool. Very cool. Yeah, I know for me, like I've always looked before I started investing in real estate notes, like funds, because I started looking at individual notes, and I'll just download for you guys. Like my experience is, yeah, I might get a slightly higher rate, but it was one, very active, right? And two, my money was locked up longer. It was locked up for maybe 10, 12, 18 months. Okay, I might be getting a slight bump in rate, but I have 100% exposure to that one borrower. What I've really appreciated about this fund is that you get the diversification over multiple assets, right? Exposure, cross-collateralization over multiple assets, to the liquidity of it. I mean, you just can't beat it. So.
Yeah, you can't. I mean, the like you're talking about, exposure is one thing, but life happens. We all think when we go into a long-term asset class or syndication or whatever you want to take your money into, that 5 to 7 years, okay, it'll be tied up. But sometimes life happens and you can't get it out. You just can't get it out of this long-term fund that you might have placed your money in. But in our fund, you can. You have 90 days. And again, I don't know that we've ever waited 90 days for anybody to actually get their money back out. So when you request it, typically we work on it as soon as possible. Those guys do a great job. Andrew and his team, Dan and his team, they all do a wonderful job on that debt fund. They handle that a lot. They don't step on our toes over here on the lending side. And really, I don't have much to do with the actual bringing in of funds or that kind of thing, except talking about it, or put my own money in, because I think that's super important. They believe in me and I believe in them, and the people that might place their money in, but they want to know what's going on with their money. I think that's super important. I think that the operators that we place our money with need to be experienced, need to be, of course, ethical, need to be just transparent on what's going on. I've talked to investors all the time that might just want to know, like, hey, tell me a little bit about yourself. And, if my money, if I put $100,000 in this debt fund and PIC fund, what kind of assets am I buying with that, and that kind of thing. So they want to know, and we spend the time and talk to them.
Awesome. So you guys, I'm sure you guys have questions. If you have questions for Kelli, drop them in the chat box, drop them in the Q&A. Let's get those answered. We have such a wonderful opportunity here. But while you guys are typing your questions, Kelli, I want you to, just if we can sum it all up, because I heard a huge pearl of wisdom there about just like I talk about with syndications. It's not the deal, it's the operator, right? You're investing in the operating business. You have to know, love, and trust that team. I think that's such a wonderful pearl of wisdom. What would be the second thing that you would want people to take away from today's discussion?
You stole my thunder because I'm going to say operator. I gotta talk about it again. The operator is huge. I get calls all the time because again, I don't just manage Rehab Wallet. I'm investing in multiple things. I joint venture a lot with other people a lot. So I get a lot of phone calls on Kelli, come invest with me. You only need one or two good syndicators, groups, because you just have, unless you just have a ton of money, that they can take your money and do great things with it. And you only need a few of those. You don't need to stretch it out amongst 10 or 12 different operators. The operator is the biggest key factor, the team behind it. And does your operators have more than just one partner? Because if you've been in this business long enough, I'm going to say it again, life happens. We don't expect death, things happen. If a partner, if you're investing with a group that has only one partner, and what happens if something happens to that partner? In passiveinvesting.com situation, which is also in our situation here, is that if something happens to one of them or me, there's other partners that would just pick up the pieces and roll on with investors' money, because that is our number one goal, is to take care of investors' money. And so that's what our job is every day to do. Yeah, we're actually moving and shaking over here with a deal here and there, but overall, our job is to take care of investors' money. So I would say operators is the number one thing, and I'll dive deeper with that. Does the operators have more than one operator or one partner in the group managing the day-to-day?
Yeah, very true, right? I always, have the analogy, like when you're investing in passively, right? We're talking about just passive investments in a real estate asset, backed by a hard asset. And you're betting on the jockey, not the horse, right? So, and if there's more than one jockey, fantastic. When you only have one jockey, that's a problem.
It's a big deal. It's a big deal. It's a big deal for everyone involved to ensure that everything's protected.
Absolutely. We did have one question come in, and it's around communications, and it came from Angel. And Angel, I'll just kind of sum it up, because we touched on this. Kelli's on the active side of managing the debt fund. Andrew and the investor relations team, they're working with the investors. So there's a nice division of duties here, right? Well, I always look for the operator, the managing partner, to be focused on the day-to-day operations of the business. That's where we want them. But the question actually was around communications. Like, how does communications occur within the debt fund? If I invested, say, $50,000, what could I expect?
Well, you definitely will get a monthly email. You definitely will get a very glossy newsletter. I have to say, passiveinvesting.com, and it takes a lot to wow me. And anybody who knows me knows that. They wow me. Passiveinvesting.com does a great job with communication and the way they present. I am proud to partner with them in that regard. So our marketing department is top notch, and we put out a newsletter on a monthly basis that comes to your house, snail mail, just like it used to, with a piece of material in there that you can actually use to let your children color. all of our partners have multiple children. I think Brandon's got 4, Dan's got 4, and Danny's on his second. And so these guys have children, so they like to add the children touch to it, which I really, really like. So, but the newsletter is full of just tons of communication on what's going on about the acquisitions on the real estate side, and also about the debt fund. On top of that, there is an email newsletter that goes out on a monthly basis that tells you what's going on in the debt fund, that tells you that's what's going on with passiveinvesting.com. So you definitely, and you have, Andrew's cell phone number. You can call Andrew at any time you want to. Obviously, my cell phone. You can call me at any time to ask me. Whitney is obviously the next one in line that you'd call her on the education piece. So there's tons of different people involved now. I think we have multiple people on the investor relations side now. Huge hiring curve going on there. So there's plenty of people to get plenty of information. You would call me for the day-to-day activities of what's going on Rehab Wallet side of what your money's actually doing. And you would call Whitney, Andrew, and his team on the debt fund, how to get in, how much money can I, am I a accredited investor, am I not, things like that.
Awesome. Excellent. So how can people get involved?
Well, I think Whitney, you had mentioned earlier how to actually become part of to get involved in the debt fund, but you could really go to rehabwallet.com. There's 2 tabs at the top. One says borrow, that's for our borrowers. The other tab says invest. If you want to just click there, put your contact information in there. Andrew or someone will be in touch quickly about how to actually get started. You can go to passiveinvesting.com on the website there, and it'll kind of just talk you through the contact page on actually how to fill in the information, and somebody will be back in touch. Passiveinvesting.com and rehabwallet.com.
Yeah. And I just dropped my email in the chat. For those of you who are listening, after the fact, it's Whitney@passiveinvesting.com. You can just ping me there as well. You can also go to passiveinvestingwithwhitney.com if you want to talk about self-storage, multifamily, and all that as well. Kelli, thank you so much for joining me today. This has been such an amazing conversation. I really hope that, investors really, have taken to heart everything that you shared with us today. I think it's an amazing investment for a variety of reasons, right? It can help diversify the portfolio. Even with one investment into the Rehab Wallet, into the debt fund, you're diversified across multiple assets, multiple markets. So really reducing that exposure risk. And, not only that, the liquidity is, not that we ever want our investors to have to take their money out, but we understand life happens. And so that liquidity is also a very nice perk for the investor as well.
Yeah, I appreciate this opportunity. I think it's good for a lot of people to see and to touch the other side. We work extremely hard. We have a great team, a very experienced and very intelligent team. We have 2 people on our team with their law degree that doesn't practice law within our business, that actually is processing loans or handling our compliance. Our compliance department, I didn't add, and I want to make sure I touched on. Our compliance department has been added this year for a very good reason. And as we grow and your money grows inside this fund, we grow. And so, and as we grow, things could happen. And so I wanted to make sure we have an employee that's just focusing on compliance 100% of her day. And I think it's been a great hire to be able to ensure that we keep these defaults at 0. That's our number one goal within the company. Yes, we want to make a lot of money for investors, and we want to make a lot of money on this side for our borrowers. But the 0 default is a mantra that we talk about in our meetings, and we're constantly after for all of us, because the last thing we want to do is to be able to have to take these assets back. That's not what we want to do. We want to borrow money. We don't lend money. And so that's a big key. So I appreciate you bringing us on to let investors see that you have some hardworking people that are out here every day working hard to make sure that we protect your capital.
Awesome. Well, thank you again for joining. And guys, you can catch us. Yeah, and you can catch us next week for our next installment of the Passive Investing Made Simple Masterclass.
Thank you, guys.